Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope all of you had a very good day of trading today. And in today's markets, guys, well, we had a battle between the bulls and the bears. We had some good Google earnings. We had some decent macroeconomic data, but it was not enough to keep the bears at bay. The index is today largely ending red as it continues to be a story all about the macroeconomic events happening this week and next week, and also the continuous onslaught of very large earnings from corporations. So in today's video, guys, I have a few things prepared for you. Number one, we are going to go over the few macro events that happened today, couple jobs numbers, some GDP numbers. We'll look at that in just a few short minutes. Number two, we're going to go over two company earnings, and those are, of course, going to be the biggest ones of the day, Microsoft and Meta. Now, I know, of course, guys, we have a ton of ones that I can't cover today and some that I didn't cover yesterday. Bit short on time today, so we'll have to only do Microsoft and Meta. I'll try to do a more full earnings recap in terms of the companies that I've possibly missed on Friday, possibly spending about 2-3 minutes a piece, but just to cover more of the basis, right? SoFi, PayPal, McDonald's that we didn't see as well. Tomorrow we'll probably do Uber, Amazon, Apple, and possibly MasterCard right behind me right there if I do have some time. If not, we'll let that go for Friday as well, where we're doing a more full recap of what happened to some of the more popular names in the markets this week. After our earnings recap, we're going to get into our technical analysis portion of the video, go over how the markets are shaping up now that we've moved through pretty much half of the week, and also take a look at our big tech names and see how is big tech faring up after most of them have reported so far. The only two big remaining ones, guys, are Apple and Amazon tomorrow. Should be a quite interesting day. And no portfolio update for today. I will save that one for the Friday full portfolio recap. As per usual, I usually always give you guys, some updates on Monday and Tuesday for the trades for the week, and then we do a full recap on the Friday session. So without further ado, guys, a lot to cover today. Let's jump right into the action. SPY down about 0.3%, QQQ down about 0.76%, and it was a battle all day, guys. Let's take a look at the heat map right here. You can see that although big tech tried its best, Apple was not cooperating to hold back the onslaught in semiconductors, which was largely let down after AMD's poorly received earnings yesterday, because I found them to be quite adequate. It was not enough, guys, to hold back the red on the QQQs. The bottom half of the market, though, decent participation there. Financials were doing good. Healthcare was all doing fairly fine, except for Eli Lilly, which had a big drop after earnings today. And the bottom half of the market, although was fairly mixed, I would not say it was as red as it has been in the past week of trading. Where do we stand on the 1 week relative, guys? You can see it's once again been a story about the tech outperformance here, and the bottom half of the market kind of being rotated away. So we continue to see a rotation away from some of the value names and into more of the tech names, but not every single tech name. Somewhat of a tech defensive trade right now, as we've seen a very rapid rise in yields because of a possible soft landing scenario, and also possibly speculation about inflation remaining slightly sticky above the expectations. Those two things will contribute to the Federal Reserve possibly slowing down the pace of its rate cuts. The guidance that they gave us in September, of course, we will get new guidance in December, but the speculation so far is for a more slowed and dampened pace of rate cuts, because the jobs numbers, the economic numbers are all coming out quite nice as of recently, right? So in terms of the economic numbers, while we're on topic, let's have a look at what came out today. So yesterday, you might remember, we got a fairly weak JOLTS job openings report. That was counterbalanced this morning with the private employment report from ADP, which came in way above the expectations. 233,000 jobs were added as opposed to the 115 consensus. In other news as well, we also got a preliminary read into PCE numbers. The final number will, of course, be out tomorrow, but we got the preliminary, and it did come in slightly above the expectations, once again reiterating that the inflation numbers may be a little bit sticky around 2%. But 2.2 is fine. It's very close to the Fed's target, right? As long as it doesn't start upticking to back to like 2.7, 2.8 type of thing, I think this was fairly healthy. And we got a decent GDP report, guys. The expectation was 3. They came in at about 2.8, which is slightly below the consensus. But once again, this is a preliminary number. It can get revised up. It can get revised down. We were really on the watch for a brutal miss, which would have been 2.5 or lower. But so far, decent, right? Anything above 2% shows that the economy is expanding. So nothing in terms of big red flags in the data today. However, tomorrow going to be fairly important to keep a watch on the inflation data coming with the PCE report. And of course, the following day is going to be a big one, guys. It is the non-farm payrolls and of course the unemployment rate with a little bit of a kicker in terms of manufacturing data. These two catalysts, I'll remind you, about 6-7 weeks ago at this point, these are the ones that really sent the market in an absolute turmoil all the way back here. These were the 2 days. We had the Federal Reserve meeting on Wednesday, July 31st, and then we got the manufacturing report, then we got the non-farm payrolls, and then Japan hit us with the carry trade, the Black Monday news. So this was an unfortunate series of events. So we'll keep a very close watch, guys, on the Friday session. These two data points together could rock the markets quite hard if either one of them misses in a significant way. So that's everything in terms of our macro data. No red flags as of yet. As I said, we've made it successfully now to the midpoint of the week without too many major red flags. Big tech earnings have largely been very good, and the economic data has also been largely good, but we'll keep an eye on it, guys, one day at a time, as we usually do on the channel. Now, in terms of our earnings, let's jump into it. So we're first going to get into the juggernaut, which is going to be Microsoft. So Microsoft currently right now down in the after hours, 3.64%, but that was not always the case. Microsoft was actually holding flat until on their conference call, they mentioned a slight increase in capital expenditures into the later half of the year and also into 2025 as well. This has been reiterated by the rest of big tech, as a matter of fact, and has been a focus for analysts, at least over the last 2 quarters, is the capital expenditures that these firms are spending for AI to ramp up their large language model offerings, their Copilot offerings in the case of Microsoft. Is the spending actually paying fruits? Or is it just spending for possible productivity and efficiency gains years down the line, right? Analysts want to see results now, or at least in the immediate future. And what Microsoft said about this is that they were actually seeing some decent productivity gains already on the matter. So Microsoft pulling down into the expected move. The expected move was about 4.2%. So not quite into that, but I was fairly pleased with the report. Let's get into the numbers, guys. So earnings, massive beat here, 6.42%, not expecting anything less from Microsoft, and a very nice beat on revenue by about 1.5%. So why is the stock down? Well, I explained a little bit of it. Let's look into a bit more. So Microsoft stocks slips more than 3% in extended trading on disappointing revenue guidance. We'll take a look at that revenue and see why it's not that disappointing. Let's move on further. Microsoft's revenue grew 16% year over year in the quarter, guys. This is a $3 trillion company growing revenue year over year at 16%. Fantastic. Net income came in at $24.67 billion. This net income rate, guys, is 37.6%. One of Microsoft's best showing in the last 2 years. Take a look down here. You can see the bottom line is net income margins. And as we see, it's been kind of stuck around 35, 36. So for them to put in a massive 37.6 number, it really puts them at the highs that we had back here in 2021. So very nice margin expansion from Microsoft, guys. 37.6 for Microsoft, for that size of a company. Insane net margins and very juicy free cash flow as well. Business as usual for Microsoft. With respect to guidance, Microsoft called for fiscal second quarter revenue. They're using the 2025 on a fiscal basis. Obviously, we know we're in Q3, but Microsoft runs one fiscal year ahead, or a couple quarters at least ahead, in the range of 68.1 to 69.1 billion. That implies 10.6% growth at the middle of the range, which is still very good. Double-digit growth, right, for Q4. Now, analysts were looking for 69.83. So if you derive the midpoint right here of about 68.5, 68.6, they missed on revenue guidance, guys, by 1.8%. A very, very tiny miss on revenue, but it's enough that at the increase in capital expenditure spending for the next quarter and 2025, that was enough to bring the stock down a cool 3.66%. Let's move on. Microsoft Azure. So we know Google absolutely crushed it with their cloud growth yesterday in 34-35% range. How did Microsoft Azure do? So Azure growth for the quarter came in at 33%. Fantastic growth from Microsoft Azure right here. The consensus by CNBC was 32.8 and the Wall Street account was 29.4. So largely beating the estimates there. Azure growing fantastically, guys. Tomorrow we will get to hear from the industry leader, Amazon, and see how their AWS business has been growing as well. But so far, Google and Microsoft showing us that the cloud gains are here to stay. Very respectable quarter from them. Demand continues to be higher than our available capacity, said Amy Hood, the CFO of the company. The full intelligent cloud segment, including Azure, Windows Server, and enterprise services, was up 20%, guys. That is absolutely fantastic. Let's move on to some of the segment analysis for Microsoft real quick. Let me move myself over. So here's our Microsoft products and services growth. Azure and other cloud services, 33%, absolutely fantastic. Dynamics products plus other cloud services, 14%. Very good, slightly lower than the last 4 quarters, but still double-digit growth here. Microsoft 365 commercial cloud enterprise, 15%, which is roughly in line with last quarter, but it's slightly under the last 3 quarters before that. Now, Microsoft 365 consumer products and cloud services, so the consumer segment, 5% growth, which is above the last 2 quarters and in line with what they've been doing for the past year. No red flags there. Search and news advertising. We know Google put in a heck of a quarter yesterday. Microsoft doing the exact same, doubling almost their performance from last quarter and almost doubling their performance of every single quarter in the past year at 18%, guys. Fantastic numbers there. Windows OEM and devices, more on the consumer segment for Windows, right? 2% growth. That is in contrast with a 1% decline of last quarter. Very decent showing. We're not expecting tremendous growth from Microsoft here. Still, nice to see a positive number. And here you go, guys. Xbox content and services, 61% to the upside. Very nice. And they did release Call of Duty 6. I'll remind you, Microsoft purchased Activision Blizzard roughly about a year and a half ago at this point, and they've been integrating the business very well into their current business. And Call of Duty 6 is a, to say the least, a very widely accepted hit from the company recently. So they should be generating some fairly decent numbers for their gaming segment over the next 1 quarter or 2. So very nice numbers all across Microsoft segments. Nothing bad to see there at all. The company saw 2% growth in sales of devices and sales of Windows OS licenses to device makers. The estimate was for that PC shipments declined 1.3%. We've been seeing this trend not only for Microsoft, but even in semiconductors who cater to individual PCs, right? We saw it with even AMD yesterday. Their personal computing segment is down, and they have been down roughly for about a year and a half in the past. And I'll remind you why, right? 2021, 2022, the years of free money and stimulus checks pulled forward a ton of demand. People who wanted new cell phones, new computers, new laptops, new tablets, they all went out and they bought them. And now 2 years later, we're seeing a normalization of that demand off of peak levels, right? Eventually in 2025, all of these companies do say that the growth of the PC segment and cell phone segment should be coming back. But as of now, we are currently in a cyclical bottoming out process of that segment right now. Microsoft's AI investments continue to be a major focus for investors as the company builds out its infrastructure and ramps up chip spending to handle heftier workloads. So spending a lot of money, guys, on AI. Microsoft has been spending more cash on property and equipment. In the first fiscal quarter, it grew 50% on CapEx year over year to $14.92 billion. The consensus among analysts was for $14.58. So that as well is a slight point of contention, guys. The increase in CapEx that was not foreseen, as you can see right here, did slightly hinder the share price. That and their slight little miss on Q4 revenue guidance. That is everything that brought down the stock 3.6%. But other than that, guys, fantastic quarter for Microsoft, business as usual. And we're going to take a look at the valuation right now. So here is forgot to change this headline. This is actually Q3 for October. I did change these things up right here. So let's move on further. So October, awesome. So cloud growth, very good. AI narrative, more CapEx. The AI CapEx does not change the fundamentals of Microsoft's business. I'll remind you, $19.2 billion in free cash flow. Absolutely fantastic for the company. And 500 million plus active users across their gaming segments, which is absolutely wild if you ask me. Now, revenue growth, 12.5% per year. Fantastic. It's a $3 trillion company. Growing revenue and EPS at double digits. EPS growth of 14.5% gives them a 2024 forward PE at 4 415, their current share price of about 31.4. When we divide that by their EPS growth rate, we get a PEG ratio of 2.17. Now, this is a little bit high for Microsoft, admittedly. When you just look at the PEG ratio, right? We know anything under 1 is good, between 1 and 2 is okay, and then anything above 2 starts to get a little bit rich. But Wall Street always gives Microsoft a boost in terms of valuation. I'll explain why, guys. Because the business is so predictable and so consistent, Microsoft tends to give them a bit of a higher valuation because of those two facets. MasterCard, Visa, Costco are just a few of the other businesses that benefit from this Wall Street bump, right? You can see Microsoft's PE ratio history in the last at least 3-4 years, as they've carved themselves away to be one of the most dominant companies in the world, has always been in the, let's call it low to mid 30s, right? So this valuation has been the same roughly for the past 3-4 years. It's tough to find Microsoft at an amazing deal, but if we come down here, it just might be. Free cash flow yield at 2.3 is a little bit low. I look between 2.5 to 5%. Usually you only see this if Microsoft goes into a very big sell-off with the rest of the markets. Other than that, that's pretty much what you get. So Microsoft, legacy company, guys, business as usual, expanding profit margins are absolutely fantastic. Look at the balance sheet, guys. They do have a decent amount of debt right here, but look at the free cash flow that they bring in on a yearly basis, and also a decent amount of cash and cash equivalents. They do a ton of buybacks as well. No problem at all on that balance sheet. Take a look at the EPS expansion. This is what I mean, guys, by consistent and predictable company. Look, there's no blips whatsoever on this EPS or revenue expansion, and all of your analyst price targets are at least in the mid 400s, excuse me, got something in my eye, or at least towards the $500 range. And that's where I think the stock is heading in the next 3 to 6 months as well, probably towards that $500 psychological, maybe even $525. I would not be surprised. So Microsoft at this point in time at 415 does remain a buy for me, both for a swing trade if you have a little bit of time on the contracts for options, and also for an add for a long-term portfolio. I think this one is a no-brainer just for me, for my personal investments, because none of this is financial advice anyways. Now let's get into company number 2, which is going to be Meta. So Meta coming out with earnings today, and they are actually down in the after hours about 3%. The expected move was about 7%, so not moving in line with the expected move, but still a little bit of a decline. Now, that pretty much just puts us back to the levels not seen since Monday, right? So not that big of a drop on Meta. Let's take a look at the numbers. 15.5% beat on EPS, guys. This company generates so much profits and free cash flows, it's ridiculous. Now, moving on to revenue, they beat by about 1%. Why is the stock down? Once again, the increase in CapEx. That was said by the CFO on the earnings call, which I listened to in its entirety, by the way. Now let's move into that. So Meta, let's have a look at the article real quick and see why it dropped. So Meta misses on user growth. Tiny, guys, tiny. Warns of 2025 jump in AI spending. I mean, they've been saying this for 2 quarters in a row, but, obviously makes a good headline, right? So let's move into the gist of the article. Meta reported weaker than expected user numbers and warned of a significant acceleration in its infrastructure expenses in 2025 in the third quarter earnings report that we got today. Sales in the third quarter jumped 19% year over year, while net income grew 35%. Guys, sales up 19% year over year. That is fantastic. Look at this net income number, $15.7 billion. That is a 38.6 net margin. Take a look at Meta's net margin history, and you will see that after coming out of the slump of late 2022, you can see that the last quarter was 34. Now, Meta has net margins of 38.6%, which is fantastic. Puts them at the highs of what they were at 2021, and even back here in 2017, before they started the whole metaverse thing. That's what kind of eroded a lot of their net margins, and it still is eroding their net margins, and we'll take a look at that in just a little bit. Now, the company reported 3.29 billion daily active people for the third quarter. That was up 5% year over year, but came in below analysts' expectations of 3.31 billion, guys. How tiny of a miss is that, right? 329 divided by 331, literally a 0.6% miss. So misses on user growth, you got to take these with a little bit of a grain of salt, right? Now, Meta also raised CapEx guidance for the 2024 fiscal year to between 38 and 40 billion. They raised capital expenditure, but by how much? Well, the expectation was 37 to 40, and now they're saying 38 to 40. So they raised the lower end of the range by $1 billion. Not that big of a deal either, right? Just looking for a reason to sell this stock off. Additionally, the company said it expects CapEx to continue to grow significantly in 2025 due to an acceleration in infrastructure expenses. Mark Zuckerberg on the call said that in his opinion, it is going to be well worth it. He said he could not divulge the intricacies of how it's been affecting Meta's performance and efficiency and productivity because of those investments, but he did say that they were cooking something pretty good behind the scenes and that more information will become available to the public in the early stages of 2025. Our AI investments continue to require some serious infrastructure, and I expect to continue investing significantly here too, said Mark Zuckerberg. Now, the company has been improving upon and building more data centers to help provide the technology infrastructure needed for its AI strategy. Very logical. More than 1 million advertisers have used Meta's generative AI advertising tools, said Mark Zuckerberg. He gave a slight insight into this. He said that their productivity in terms of their ad placement software, right, was excessively good, guys. They're noting a 2 to 4% increase in conversion rates for the ads that they place for respective people, and that's what AI has done, guys. 2 to 4% increase in conversion rate might seem very small, but it's actually huge. If you guys have ever done online sales, you guys know increasing your conversions rates by just 2 to 4% for every 1,000 people, that is absolutely fantastic. They don't say it in the article, but that's me listening to the earnings call. Meta said it expects total expenses for fiscal 2024 to be in the range of between $96 billion and $98 billion, which is lower than the previous guidance of 96 to 99. So they lowered the total 2024 by $1 billion. Give or take. Meta's advertising revenue came in at $39.9 billion for the quarter, up 18.7% year over year. Advertising juggernaut, guys. They are the leader in the industry, and this is why still growing at almost a 20% year over year run rate. Fantastic for Meta. Meta said it is expecting fourth quarter revenue between $45 billion and $48 billion. The midpoint of that guidance is higher than the analyst consensus of 46.3, so they beat on next quarter revenue. Now, since 2020, Meta's Reality Labs unit has recorded an operating loss of more than $58 billion, guys. This is how much money Mark Zuckerberg has sunk into the metaverse since 2020. It is a staggering number. You can imagine what their profits would be if they were not going down the rabbit hole of the metaverse, but Mark Zuckerberg seems to be intent on going down that rabbit hole, so it's his company. I can't really say anything about that. But you guys have to see the numbers for what they are, right? So here's the Reality Labs. Here's your advertising revenue, right? Almost $40 billion. How much does the metaverse bring in? A cool 270 million, guys. That is absolutely nothing. But here's the kicker, right? Out of the net income, which you can see right here, right? Income from operations, 21.7 billion comes from advertising in the family of apps. Now, what the drawback is look at this Reality Labs spending, guys. It is literally $4.4 billion, and every single quarter he plows $4 to $5 billion into Reality Labs without showing much revenue for it. This is literally taking away 20% of your operating income. That is huge, guys, right? So imagine every single quarter you could have arguably close to 40% net margins if he wasn't doing this, and you would have, increases in cash flow. The cash flow is already absolutely fantastic, but you would have even more. So it just goes to show you how crazy a company Meta would be if he would not be spending this on the metaverse endeavors. That being said, let's have a look at the valuation, guys, together. So a little bit of a recap. Cost savings continue to push profits higher. We saw that net margin expansion. Amazing revenue growth. Ads are solid. Still $31 billion in buybacks remaining, which is 2.5% of the float. 2025 CapEx will expand. 15.5 billion in free cash flow, which is absolutely ridiculous, guys. It crushes their last few quarters. Look at this free cash flow. You won't see it here, but 15.5 is current quarter. Look at the last 5 quarters, right? 11, 13.8, 11.7, 12.8, 11.2, and now they put in a 15.5. Boom. Now, 38.6 net margin, which is absolutely fantastic. Revenue growth rate of 12% per year. EPS growth rate through 2027, 14.6. Now I brought this one down, guys. It's supposed to be 20, but I brought this one down just to be fair in my valuation because now we are almost through the big increase from 2023 to 2024. We only have one remaining quarter. So it stands to argue that the bump from 23 to 2024 has less of an effect, right? It's almost all realized. So what I did is I just took out this bump altogether and I went with the future growth 2025 onwards, right? So that being said, I revised it down from close to 20 to 14.6 just to be more fair. So that being said, at 574, we get a forward PE of 26, which is fairly cheap for Meta, all things considered, especially when you measure in terms of the last few years. We can bring up their PE ratio history right here, and I'll show you what I mean by that. Well, unfortunately, it's crushed down here. So let's just remove this guy, see if we can get a better idea. So you can see Meta, on a trailing PE, they've always been about mid-20s so far, sometimes going as high in the 30s as well. So you can see 26 is fairly average for the company, right? It's not cheap, it's not expensive, it's right in line. Forward peg with this revised EPS to the downside is a 1.78 peg. That's fairly decent for Meta, guys. I mean, it's not cheap, it's not expensive, it's kind of right there in the middle. Same thing with PE. And free cash flow yield, this one is very good, guys. We look for between 2.5 and 5. So this is all arguably the midpoint of that range. Closer to 5 is good, but 3.4, you can't complain. If Meta were to have a little bit of a dip back here, down to the 530, 520, both of these numbers would get better and would present a little bit of a buying opportunity. So Meta, in terms of I love it, guys, I would love it a little bit lower, but if I'm holding right now, which I am in my long-term portfolio, I see no reason to sell. Meta's absolutely crushing it right now. Their efficiency is going up. Their margins are going up. They're spending a ton of money on AI. Yes, this is true, but I think they will see the fruits of that intensive capital that they've been outlaying. In terms of a swing trade, well, we'll get into some of the levels when we cover our technical analysis portion of the video a bit later. So we'll do Meta and Microsoft on the TA in just maybe about 10 minutes worth of time. So that's everything for our earnings today. Hopefully you guys appreciated that. Now let's jump into our technical analysis portion of the video, shall we? So we know that now we are through a lot of the macroeconomic catalysts that we've had in the last couple of days, but we still got a couple more, right? Inflation tomorrow, and then the big one on Friday, non-farm payrolls, unemployment, and your manufacturing data. So couple little pain points possibly remaining for the market. And we know we have the big ones, Amazon and Apple tomorrow. Another big one is MasterCard right back here, but I don't think that they're going to affect the markets too much, especially with Visa earnings. I think that they should come in roughly in line. Very rare for Microsoft to miss anyways. So the entire focus will be on Apple and Amazon. And after that, guys, we're done. Thereafter, all we have to look forward to next week is, of course, the elections on the Tuesday evening, and the Wednesday in the afternoon, we get Jerome Powell with a potential interest rate cut. So the data points for the next week are, getting fewer and further between at this point. Yes, we still have a few more, but I feel that the markets have been fairly resilient, especially through the last roughly 3-4 days of trade at this point. Been a lot of anticipation for these earnings, and the markets are holding up quite well. However, we also need to keep in mind, guys, I've been pointing this one out, right? Keep in mind the rising wedge, right? This rising wedge is about 3 months old at this point, so we have to notice it, guys. If we break down here and get the daily downtrend for the bears, right? If we start breaking down, we know that it was already starting to look like a daily downtrend. If we break these lows, 575, it'll be doing two things. Daily downtrend for the bears, but also a significant break of this rising wedge. Now, as I was saying in yesterday's video and the day before that, you don't even, this is going to be obviously dependent on news, but you don't even need to actually look at the news. If it breaks in a significant fashion, you can understand that the news was not favorable and that we are probably going for further consolidation. So you can say that TA is a self-fulfilling prophecy, and in some formats it is, right? You can either be news dependent or you can be looking at the TA specifically. You won't miss anything if you're looking at one of the two, that's for sure, right? So if they confirm the daily downtrend here, just watch out, because if a 3-month rising wedge breaks, guys, usually you get at least 1 to 2 weeks of follow through. And if that's the case, guys, I can see a scenario where we kind of break down from here, go for the weekly higher lows. And at that point, we may end up at the 565, 550 or 565, 560 on the SPY, which is previous all-time high resistance. Should be newfound support right below the 12 EMA, and a lot of space for the bulls, anything above 540. Just looking for a weekly higher low, right? Because we know the weekly uptrend is in full bull control right now, possibly after 5, 6, 7 weeks of rally and a little bit of sideways, might be due for a little bit of a pullback. But once again, it is going to be highly dependent on the data points that come in tomorrow and the day after on Friday, and of course the earnings that we have in terms of Amazon and Apple tomorrow after the close. Tomorrow, we might see a little bit of weakness because of the Microsoft and Meta earnings, but remains to be seen if that actually carries through or whether or not investors choose to buy the dips. But I really like those earnings today. Moving on to the Qs. So the Qs also have a somewhat similar setup, but they have a lot more space before actually breaking it, right? We know that big tech has held up better than the rest of the markets over the last week of trading pretty much. So at this point in time, the bulls arguably are a bit more in control, even though it's choppy, right? They had the daily downtrend right here. We reversed it, and now we're kind of looking for the higher lows into higher highs. Higher highs, guys, we need to break this area. 500 on the Qs, need to smash above it if you want to see any semblance of a daily uptrend breakout at this point towards the all-time highs. In the event tomorrow we're lower, we are lower on the futures right now because of the Microsoft and Meta earnings. In the event we break lower, we'll keep an eye on this level right here, guys, 485. If you start losing this level, daily pullback like this, and then we start testing this level, either back test the rising wedge, bottom end of the channel right there, that would be a very bad sign, guys. If we give all this back test, pretty sure that this is a setup for a juicy short into possibly the 481 to 475. So keep a lookout for that, guys. If ever earnings, the follow through from Meta and Microsoft is bad tomorrow and big tech continues its drop, and we get hit with either bad economic data and bad earnings from Apple or Amazon, or bad earnings. Poorly received earnings, because I'm pretty sure Amazon at least is going to be good. Apple is a toss-up at this point, but we saw Meta and Microsoft had very good earnings, guys, and they still pulled back today. Arguably inexplicably, but you guys know what I mean, right? Earnings are always a casino. They can be very good earnings and the stocks can drop. All I'm here to say is if we do get that pattern, well, you're probably looking at a little bit of weekly consolidation on the Qs. At this point, anything above 448, looking for a weekly higher low for further trend continuation, and probably looking for a base of support around the 480 down to about 475. So keep our eyes peeled on that. Now, moving on to the XLF. So financials was a bright point in the markets today. Everything else was red except for financials. So financials holding the tight range very, very nicely. What's the context, right? What a nice daily uptrend. The bulls were looking for the daily uptrend continuation, but now we've gotten a little bit trapped, right? So in the event we break 46.58 to the downside, that would be a daily confirmed downtrend, and we would be heading towards a little bit more weekly consolidation. But that's okay because we know who's in control right now of this weekly uptrend, right? It is the team bulls. So any weakness on the daily should be met for just a weekly higher low. At this point, anything above 44.70, looking for a weekly higher low for further trend continuation. Area of confluence should be right around there. 45.90, right? And the 12 EMA, this is horizontal previous resistance, should be support, and the 12 EMA is right there as well. So as of right now, no red flags on financials, but we'll keep a very close watch on this. Moving into healthcare. So healthcare was down an absolute ton today, down about 0.19%, and that was off the back of Eli Lilly earnings, right? So Eli Lilly came down at one point this morning, guys, almost 14.5% before retracing more than half of that, ending the day up kind of, roughly in the middle of that drop of a range. So healthcare has been definitely one of the pain points of the S&P in the last roughly, let's call it 2 months of time. Now we know the context right now is a severe daily downtrend, but we also know that we're coming in to a fairly large area of support down here. Prior resistance should be newfound support. They tapped the 50 EMA today, and we're trying to find a base of support here between the 148 to about 145. What you need to see, guys, is kind of what manifested early on in the day. If you want to know when the end of this daily leg down is going to be finished, well, we do have daily oversold conditions, so that could be one indication. But number two, we have to get the hourly trend back. And they actually did that over the course of, well, let me just show you regular hours, right? We're kind of getting it together, guys. We have not had an hourly uptrend since we really lost it all the way up here, right? So on the watch for that hourly uptrend. Once we get it confirmed, then we have a daily bounce underway. Then you measure how high does the hourly trend take us? Does it take us into a nice daily bounce of at least 50 or 61.8%? Or before we lose the hourly uptrend, does it only get up to about 38 and then roll over? That would be bad. That would mean that we would probably revisit these lows or possibly even go a little bit lower. So we're on the watch for the size of the bounce right now. The bulls are kind of running out of areas of defense. Weekly downtrend is well ingrained. On the monthly though, the monthly is the key factor right here. It is still a very nice monthly uptrend. But the bears have been selling aggressively the last 2 months. At this point, anything above 138, still looking for a monthly higher low to continue this beautiful monthly uptrend. We did have one bright spot in the market today on healthcare, which was AbbVie, one of my favorite companies. Unfortunately, they didn't come down to pick me up, guys. I was looking for it down here. I've been talking to you guys for this one for a while, right? Was looking for the monthly retest and possibly run. They didn't give it to me. They had fantastic earnings today, and they popped. One of my favorite healthcare companies for a reason. So I guess I'll have to relegate myself to possibly going shopping for UNH. If UNH retests 550 down to about 530, that's going to be the same opportunity, right? Looking for the monthly higher low into roughly a year and a half's worth of resistance, which is now support, monthly higher low for possible further trend expansion. So those were the two healthcare names that I was looking at closely. NVO also possible catalyst, but they have earnings next week. Now semiconductors. Well, we have to start it off with SMCI, don't we? Don't think I forgot about SMCI, right? Down 33% on the day. I'd been warning about this company, guys, since all the way back here. I was saying that it's a red flag. Do not forget SMCI. So I'll just explain what happened, and then I'll explain a bit more. So essentially today, what happened is the accounting firm that does SMCI's external auditing, they actually resigned from doing it for the company. And this was Ernst & Young. They are one of the largest accounting firms in the world. And they said, you know what? We don't want your business no more. And the reasons they cited, because they had non-confidence in what management was reporting to them. That is a very big red flag, guys. I understand that the last few quarters, we've heard that demand for SMCI products has been very high as the AI ramp continues. But, you know, this is not the first time that management has done this. Delayed a 10K, been accused of accounting malpractice. It actually happened back in 2018. SMCI was trading on the NASDAQ in 2018, and they were delisted by the exchange for missing these exact same guidelines. They missed on filing reporting deadlines, and they were accused of accounting malpractice, and they got delisted. And now here we find ourselves again, 6 years later, with the exact same concerns. And I was saying back here, and a lot of people didn't want to hear it, I was saying, I'm pretty sure SMCI has topped, not only for now, but probably almost, dare I say, forever. So this trade, guys, you know, when you see the red flags mounting like that, that is the biggest red flag, guys, when you start hearing about accounting malpractice and things like that. And today just continues, right? So if you were in the stock for a trade, right? Well, obviously you know that your last line of defense was right here. It really invalidates everything. Yes, we are coming into support down here, roughly the 34 down to about 29. But guys, still, even if we are coming into daily oversold, even if it is a crazy drop right there, they have earnings coming up next week as well. I'm still not really interested in playing this company at all. There's just too many red flags in the business for me. So for that reason, guys, I will not be playing it anymore. I'm happy to say that I never personally lost any money on SMCI. Whenever I was trading it from daily oversold conditions, I usually timed it pretty well to get some bounces. But at this point in time, guys, it's just too much. An accounting firm the size of Ernst & Young resigning on their case is the massive red flag. So I just can't do, I can't delegate my hard-earned money to this type of company anymore. But best of luck to all of you out there who continue to remain, advocates for the company, right? So moving on further from the semiconductors, well, in terms of the rest of the index, guys, you know, it wasn't a very good day. And a lot of that had to do with the AMD weakness. As you can see right here on the one-day relative, everything was red. Let me move my shoulder out a little bit. You can see everything, and I'll read everything again, was once again red. So big problem for semiconductors right now, but I think it's a little bit of an overreaction in my humble opinion, guys. We ran through all of these earnings together, and to be quite frank with you, it just was not that bad. But we know this industry, if anything, it's a very, very volatile industry. So let's take a look at the technicals, shall we? So moving on, it was a daily uptrend, and then we kind of became a little bit range bound as we struggle with this overhead resistance of 260 down about 250. The bulls are still struggling with this. Suffice to say, if we lose 245, guys, it will be a confirmed daily downtrend at that point, and we will be going into a little bit more weekly consolidation. We had 6-7 weeks of a glorious rally. We might just be looking now for a bit more consolidation into weekly higher lows, and at that point, we'll be looking for 240 down to about 230 to act as a nice line of defense, looking for the weekly higher lows for possible further trend continuation. I like this weekly MACD though. It's been very, very weak recently, and I think that another leg down and possibly a little bit of a rise will turn us, on the momentum side at least, into positive territory, and we might be due for that end of year rally in semiconductors because we know that for the most part, other than NVIDIA and AVGO and TSM, The entire industry has done absolutely nothing for the past 3 months, right? We can go through a ton of names. We can go through Micron. Micron hasn't done anything in the past 3 months. We can go through Applied Materials. Applied Materials hasn't done anything. LRCX hasn't done anything except for fall. ASML hasn't done anything except for fall. AMD hasn't done anything except for fall. What are some other ones off the top of my head, right? TXN had their earnings last week. I mean, they've been doing fairly good in terms of being resilient towards the all-time highs. That's one exception, right? I'll put them in the mix. Qualcomm also has fallen from the recent highs. The industry hasn't done anything except for just a few names. NVIDIA maintaining all-time highs, AVGO maintaining all-time highs, and TSMC maintaining all-time highs, right? So it's really just being upheld by a few major players. So moving on, that's the analysis for semiconductors. Still a little bit weak, but I do expect, guys, towards the end of the year and especially into 2025, we're probably going to get that second leg of rally after being muted pretty much since the July month. Now moving on to IWM Russell. The Russell's struggling today, pretty much right on cue, right? So we know that we're still struggling, guys. The overhead resistance from back in 2020 and 2021, talking about 225 up to about 233-ish. That's going to be a big pain point for the Russell, in my opinion. As of right now, guys, probably just a tightening consolidation range. But keep an eye, though, if they set the lower high today and they drop and they flush to 217 in overall market weakness, we will get a daily downtrend and it will send us into further extension of weekly consolidation. We do have a weekly uptrend right now, but it's kind of losing a little bit of momentum, right? I'd be watching this key level right here, 215, break 215, you lose the weekly uptrend, and we might just be relegated back to our last line of defense support, which is the 214 down about 207. So the Russell just not cooperating right now. The growth trade is just not ready. And a big reason for that, guys, has been the rapid increase in your 20 and 10-year yields. A lot of these Russell companies, they need that debt to grow. And when debt is not becoming cheaper, at least on the longer term timeframes, obviously that it's very tough for those companies to raise and leverage that capital to grow their business. So that's why the IWM has been slightly muted, in my opinion. Moving into the Dow Jones now, lastly, Dow Jones down about 0.2%. Not the worst for them, but we know the context right now is a daily downtrend. Lower highs are set, and we may just be heading for lower lows, continuation of the daily downtrend at that point. Support area is right there at 41,900. The 50 EMA is right there as well. A couple more days of weakness should bring us right down into there. So now that we know we're in a daily downtrend with possible continuation, we have to zoom out. What are we looking for here, guys? Well, we will just be looking for a weekly higher low for possible further trend continuation. So if we blast through this 41.9 as if it's not even there, even though the weekly 12 EMA is there as well, we might just end up down here in the bigger area of support, previous resistance, newfound support. The 26 EMA is right there. You can see the Dow Jones has respected the 26 a lot better than it's respected the 12 this entire year so far, right? So at this point in time, 41,003 down about 40,008 should be that line of defense in the event we crack through this with bad earnings from Apple and Amazon, and also possibly with bad macro data. Those would be the two catalysts that could possibly send us a little bit lower. Now, moving on further into the list, let's go over into big tech right now because we covered yields earlier in the week. They don't move too fast. The analysis is the same. We covered Bitcoin the last 2 days. They haven't moved much today. The analysis is the same as well. We'll cover them probably tomorrow or Friday. Moving into big tech now. So Apple, we obviously know that it's going to be impossible to derive price action for tomorrow on Apple, right? The best we can do is look at the expected move and tell you guys how we might be able to possibly attack some trades after earnings, right? So expected move of about 3.5% up or down. So at this point in time, 3.5% to the upside, guys, would pretty much put us right at the all-time highs tomorrow after earnings. If they break through the all-time highs, we might just be looking for a breakout and possible retest trade for a little bit of an entry here for possible trend continuation. However, if they break to the downside, 3.5%, we would end up all the way possibly, well, that's a little bit too far. 3.5% would be right about here, right around the 222. That would be a daily confirmed downtrend. We would possibly be jeopardizing the loss of this big area of support, 230 down to about 224. So key range, guys. If we break into the lower 220s, it's not going to be looking the best for the short-term bulls. In terms of the weekly as well, the weekly higher lows are right down here at 222. Lose those over the course of the remainder of the week, right? If we close the week below 222, you will have lost this weekly uptrend. You'll have lost it. You'll be going into weekly consolidation. And then we look to our longer term bulls to where can we possibly end up in I think the first line of defense, you see it better on the weekly. It's these guys right here, right? Roughly 220 down to about 215. That's going to be the next level of support for Apple bulls. And if earnings really fall off a cliff, guys, and if we go 2 times the expected move, this is the unlikely scenario, but can always happen, right? If we really break down, guys, I've been telling you guys for a while, right? The area that I actually want to go shopping for Apple is 210 down to 200. If we open up those opportunities in the next few weeks of trading, I will be trading Apple stock down here. But even, if we come down here, 219, 215, in a somewhat soft fashion, I could be tempted to make some short put trades around there, or maybe even some call debit spreads for possibly some Q4, which is known to be one of Apple's best quarters. So that's the fact of the matter for Apple. Moving into AMD right now, AMD 10.5%. Before we get into more, let me just get a quick little sip here. Thank you for your slight patience. So AMD, guys, even though they had good earnings, I like their earnings. We covered them yesterday on the channel, down 10.62. So unfortunately now, the context was a daily downtrend. We had a nice engulfing move, and we were looking for the possible daily uptrend reversion and recapture of this big level, which has been a very big level of congestion for the stock so many different times throughout this year so far, right? Very, very challenging range, 155 to 162. And unfortunately now it has become resistance once again, cannot clear it. So now, guys, unfortunately, not a confirmed daily downtrend. We would still need lower high into lower low. But unfortunately, guys, any bounce at this point will be into a big area of resistance and probably due for possibly another leg down as well. On the weekly, we can see right now, guys, they're losing ground very, very fast, right? It was a weekly uptrend. This is still just weekly consolidation. We're still looking for a higher low, anything above 131, looking for that higher low, but for possible further trend continuation, guys. But it's not looking good, right? Give back too much of this move and you lose all of the momentum, and then you might have to start from scratch. Probably not going to get a V shape, but you may be able to do the 2-step weekly uptrend recovery. It's just not going to look very good. That being said, if we do come down here, 141 down to about 125, this is my desired range to be able to write some options on AMD. So I could be exploring some options there, but you guys know how I like playing AMD, right? I wait for a big red day and then I write significantly below, right? I don't mind picking up the shares, but I'd rather benefit from the volatility. So those are just a few of the things that we're going to be looking out for AMD in the next few days, in the next few weeks, as we kind of battle with this overhead resistance and we kind of approach possibly into deeper support, where I would not mind playing some short puts, especially the lower 130s, guys. That's really the sweet spot for me for AMD. The valuation is a lot more attractive there. It has a better margin of safety. Moving on to Amazon right now. So Amazon up 1% today, but down in the after hours. Meta and Microsoft kind of dragging them down. They did have a nice break, guys, but Amazon has earnings tomorrow, right? Even though they have gotten the daily uptrend, we are above the 190 to about 188 level. We know that that may not matter because earnings is going to be a lot more than that move. Let's take a look at the expected move. Probably going to be looking at about 6.1%. So 6.1% to the upside. Suffice to say that if they beat 6% to the upside, guys, we are going to new all-time highs, well above the $200 mark. So at that point in time, just gonna be looking for the breakout and possibly retest, right? We'll get into Google after and I'll show you what I mean. But Google, same thing, right? Broke through a big key level on earnings, retesting this level of support right now. Could be some nice opportunities for the continuation of the uptrend. So Amazon could be possibly presenting a similar trade if that's the case, if they break through 200 and then come back into the whole 200, 195 to consolidate. Could be a nice little breakout retest entry trade. In the event they falter and fall after earnings, guys, 6.1%. would put them exactly where I want them, 180 to 178. This is the area that I would not mind writing short puts, but also an area that I also would not mind buying some leap call options because I think Amazon is well positioned, at least for the next few years. But keep in mind, if they do lose that level right down there, guys, 184, we would be sacrificing a little bit of weekly momentum right here. We'd be relegated back down here. We'd be struggling in a weekly wide range, right? But we do have very good support down here, 180 to about 175. That's my target range for either writing short puts or going for some longer dated leap call options or call debit spreads, things like that. So we'll take a look at Amazon earnings tomorrow after the close. Very tough to determine which way this one is going to break because we know they could have great earnings, just like AMD had decent earnings, Meta had good earnings, Microsoft had good earnings, and they dropped, you know what I mean? So earnings is always a casino. Google giving back a lot of their move, guys. They were up at one point over, almost 7% today, right? 7.5% before giving almost 2/3 of that back today, ending just under 2.92 and down an additional 0.6%. But I'm so happy with Google's earnings, guys. it really reinforces my position as a long-term Google shareholder. The short-term price action, guys, is always going to be slightly confusing amidst earnings and amidst macro. The one thing you have to focus on is, are the long-term fundamentals of the company getting better or are they getting worse? And as we saw in Google's earnings yesterday, they're getting much better right now. So this short-term price action, guys, it may be key for day trading and stuff like that, but it should not change your long-term view on the company. So moving into that, daily is looking very nice right now, guys. A little bit of a healthy pullback, of course. Now, keep in mind the daily was overbought coming into today, and now we are completely flipping. We came from overbought on the 1 hour. We're now much more manageable conditions. Came from 4 hour overbought, coming into more manageable conditions. At this point in time, even the 15 minutes, if we continue red into tomorrow, guys, we're starting to get oversold conditions on the shorter term timeframes. Now, there is still a little bit of a gap to be filled here, and even if we give the entire earnings move back, guys, I don't think it really matters at that point in time. I'll still be interested in writing some short puts down here. 170 to about 167 is the sweet spot for writing short puts in the next 2 weeks. If Google gives me more opportunities to farm premium on such a good stock at such a good valuation down here, I will be taking those opportunities. So I'll be looking for some short puts, looking for the breakout retest. And on the weekly, guys, we'll see how the weekly closes. But as of now, it is a confirmed weekly uptrend breakout. We're still struggling to break through this resistance area. We'll see how it closes. But the weekly, no red flags. And the killer for me, guys, is down here on the MACD. This is pretty much 3 months of consolidation coming to an end and possibly showing some bullish momentum, maybe leading into the rest of the remainder of the year. Once we get through all of these earnings catalysts, the macro catalysts and stuff like that, get into November and December and January, that's usually when the big tech tends to outperform in terms of seasonality. Moving into Meta right now, Meta down about 3.15% in the after hours, of course, coming into the lows. As I said, the lows not seen, guys, not seen in a very long time, since Monday, right? Not that far away. So Meta at this point in time, they do have a very nice engulfing move. We know the context was a daily downtrend, big engulfing move, enough space to possibly reset into a daily uptrend. However, if we fall even more and cut these lows, 562, they will sacrifice this entire move. You open the doors for the lower high into lower low scenario, and you also open the door for a bit more weekly consolidation. This weekly candle is not closed just yet, and we've never secured the daily uptrend. So this would not be weekly downtrend. In my opinion, this is one single move. So it depends how the weekly candle closes on Friday. If it comes down even more, we are still looking for a weekly higher low at this point. Anything above 494, looking for the higher low, and so be it. If Meta comes down all the way here, 545 to 530, I'll be sitting there. One of my favorite trades, breakout, retest, and possibly run. Longer term time frames look good, We just looked over their earnings. They're doing fine. Moving into Microsoft right now. So we covered their earnings as well. They're down to about 416-ish, right back down kind of towards the lower end of our prior support range here and close to the 200 daily EMA. Now, Microsoft, this has been the same thing all year, right? This area has been very, very challenging. And once again, we cannot get the break above for Microsoft right now. So if anything, it presents yet another buying opportunity in this area all the way down. I mean, here is a slight little nibble in my opinion. A few call debit spreads, a few shares, nothing bad there. But if we come down for some reason, 405 down to about 395, where we revisited this August and early September, this will be where I'm going to go heavy, adding more leap contracts, a bit heavier on the shares, and call debit spreads as well. So we'll keep a close eye on Microsoft, how it goes tomorrow, but definitely the daily uptrend at this point is now lost. We flushed the higher lows at 422. So we'll keep an eye how this one goes. And once again, we remain plagued in this tight weekly range of accumulation, which we've kind of been stuck in, guys, for a majority of the year so far. But one thing is remaining. Is the company getting fundamentally better or is it getting worse? We just went through their earnings, guys. The company is getting better. Profit margins are up. Free cash flow is up. Everything is looking good. So this is the areas where you kind of want to accumulate positions. Company is moving sideways. The share price is moving sideways. But what has the company done this entire year? They have raised revenues. They have raised earnings per share. They have raised profitability and they've raised free cash flow. Everything is going up, but the stock is flat. That is when you usually get the best buying opportunities for a little bit of long-term follow through into 2025. Moving into Netflix. Netflix down about 0.75%. Nothing much to see here either, right? Just a sideways range of consolidation. Keep a close eye though. 746 to the downside. If Netflix gets brought down with the rest of the market, it will be a daily downtrend if we flush these lows. And daily downtrend is not much of a concern for me, because who's in control here? The weekly bulls, right? Looking for a weekly higher low for possible further trend continuation. So I'd be eyeing maybe the 730 down to about 715 area, let's call it. If we retest that area, could be good for a little bit of a swing trade to the upside. And Netflix bulls are in long-term control. So even if we consolidate a little bit, guys, into the next few weeks of trade, I do think it's a decent opportunity there. Monthly bulls in control, weekly bulls in control. It's just on the daily, we're kind of struggling with the SPY and the QQQs as of lately, right? Moving on to NVIDIA right now. So NVIDIA down about 1.36% today. But, you know, being one of the industry leaders, the one thing that we saw from AMD earnings yesterday is it's very, very tough to compete with NVIDIA, right? Even though AMD is second, they're still trying to claw away at NVIDIA's market share. And it's not that easy. So NVIDIA still remains one of the major players in semiconductors and probably will stay as the market de facto leader probably forever at this point in time. Their lead is just too large, right? Who's going to compete with them? AMD or Samsung or Intel? Probably not. They'll be able to get a little bit of a slice of the pie, but definitely not as much as NVIDIA. So daily downtrend right now, not a close below, but if tomorrow we do close below, daily downtrend will be confirmed. We will also lose this 12 EMA. Daily downtrend, ooh, big thing, right? Not really, guys. Look at the weekly. Weekly, very nice weekly uptrend right now. Looking for the weekly higher low, as I've been saying in previous videos. In the event we lose this and start consolidating with overall SPY and QQQ, look for the weekly higher low. Anything, anything at this point above 101. Just looking for a weekly higher low for further trend continuation. First stop is right here, 130 to 126. The 12 EMA is there on the weekly. Big previous weekly resistance should now be support. And in the event we flush through this entire zone, this is where I'll be looking to go a little bit more heavy, 120 down to 115 to possibly position for NVIDIA earnings. The one thing that we've gotten from big tech so far, Microsoft and Meta specifically, and even Google yesterday, right? People are kind of a little bit upset that they're raising the capital expenditures on AI, building out more data centers. But what have they just done, guys? They have literally telegraphed NVIDIA's earnings for you. If these companies are saying they're raising capital expenditures into Q4 and raising capital expenditures into Q5, what does that mean? It means that NVIDIA's sales are not going to decline, are they? NVIDIA is still going to have massive pricing power. They can't keep up with the demand. And now they just got guidance that there's going to be even more demand into next year. So any major dip buying opportunity on NVIDIA is just that. It is a dip buying opportunity, at least until the end of 2025, in my opinion. So the guidance for that looks very good. Moving into Tesla right now, Tesla continued to consolidate down about 0.76, an additional 0.5% in the after hours. But completely normal. They had a tremendous rally. We knew that 265 was problematic. They've been struggling with this area multiple times in the last 1 year of trading, and today is no different, right? So pulling back a little bit, who's in control here? The daily bulls. Any pullback right now, still looking for a daily higher low. Anything above 212, looking for that daily higher low for further trend continuation. We'll see. But if the bulls give back too much of this move, guys, you end up possibly in either a tightening range below this area of resistance, right? Or you open the door for the bears to capitalize lower high, lower low, daily downtrend. At that point, look to this area. 240 down to 235 is next support. The weekly's looking good though. Nice weekly uptrend on Tesla right now. They haven't given back too much. So anything on the weekly looking for a higher low, anything above that same 212, higher low for possible further weekly trend continuation, and a second or sixth attempt at breaking the 265. So Tesla, not looking too bad. I'd be more interested in playing it as we approach these lower levels down here, because now we're kind of trapped in the midpoint, right? Moving on to Palantir. So Palantir down 2.76%, and Palantir as well down an additional extra little bit in the after hours right here. If I just turn them on real quick, you'll see we're down an additional 2.5% in the after hours. So Palantir coming down a little bit, right? Where was that after hours mark? It was right down here, 42.19. So you can see that line right about here. So Palantir, unfortunately, now at risk, if they open like this, at risk of losing the daily uptrend. This would be a first loss of the daily uptrend since all the way back here in early September. In the event they lose this daily uptrend flush and the bears take over daily downtrend, is it all over for Palantir right now? Well, no. When in doubt, zoom out. Yes, they will lose the daily. They will lose this 12 EMA that they've been riding since the early portion of September. But who's in control here? We've been anticipating, guys, a weekly pullback. It is due after 6, 7, 8 weeks of rally, tremendous rally, weekly overbought conditions. A normal pullback is more than expected for this company, right? So moving on in, if we get that weekly pullback for the next 1 to 2 weeks, potentially, Palantir has tons of space, guys. Anything above 29.74, let's call it 29. Is just looking for a weekly higher low for possible further trend continuation, and I'd be looking at this $39, $38 range for an area of support. It was pretty much the best confluence that we had from 2021, and the 12 EMA is right there as well. We'll see how it reacts to this level if it pulls down into it, of course. At that point in time, I'll be interested to write some short puts. $36, $35 range seems fair to me, and we only get Palantir earnings next Monday, right? So coming up shortly, guys, not that much time next Monday, so not that many days of trade left before Palantir's earnings. So we'll see what happens in terms of that. So that's pretty much everything I had for you guys in terms of today's video. Hopefully you enjoyed that. If you did, consider dropping a like, would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We'd love to have you back here. And lastly, if you have any questions at all, please always feel free to leave them down below in the comments, and I will be more than happy to answer you guys. And as per usual, if you want access to my private Discord, where we have private live streams, where I share all of my trades, updates in real time, private videos as well, and chat with me all throughout the day. Ask me anything about your trades, your options plays, anything all throughout the day, guys. I'm in that Discord. If you want that service, it is always linked down below in the description. So potentially see you in there as well. That's it for me, guys. Have a beautiful rest of your day tomorrow. We'll see you after the close. Take care, be careful out there, and peace.